Let me welcome on board Angshu Mallick, the CEO and MD, joining in on the show right now. Angshu, hi, morning. Good to have you on the show. Angshu, the edible oil volume growth is ahead of what the market was anticipating. But given that the price cuts that the company has taken, wanted to understand what the reduction in realization is that we can expect going forward as well as also the previous quarter.
Good morning. The market, although has shrunk in terms of edible oil consumption because of the higher prices, but Adani Wilmar brand, Fortune, and our other brands have done comparatively better. That is one, because we have a bigger portfolio of oil. And second is that our reach in the rural market and tier 1 and tier 2 markets. Now, coming to prices, the prices have reduced from the top almost 25-30%. In some of the oil, it is 40%. And we have been able to gradually pass on that benefit to the consumers. Thanks to government who has initiated a lot of actions in between, and we have been able to pass on that fairly comfortably. Now, as far as the pricing is concerned or the profit margins, oil-wise, it is different. So, and as a brand, we have been able to manage the bottom line pressures. However, we have always looked at volume growth more eagerly because we always felt increasing market share in the long run will always be beneficial to companies like us.
Right. So let me just get this right. Commodity prices have come off. So have you taken any price cuts, and will you be taking any further price cuts?
See, in the last one quarter, we have issued 2-time press notes of reduction in prices, which we have done. Going forward, we aren't very sure how things would happen, because normally July, August, September, we consider our technical months. And in a technical month, what mainly happens is the weather condition, because the weather in US or India or China will play a very important role in stabilizing the prices. That is one. Exchange rate, and the third is the geopolitical situation. So all these three things put together will have a technical issue rather than fundamental. I am not able to comment on how the prices would be, but surely if there is reduction, we are here to pass on the benefit to the consumer.
Fair enough. Mr. Mallick, good morning. Now, what is the outlook in terms of your margins? You spoke of this reduction in raw material prices. If this is likely to sustain, when do you think we can see this benefit play out in your margins?
See, in our margin, we normally look at how do we reduce our fixed cost rather than increasing the prices. Now, reduction in fixed cost comes from volume. Quarter one volumes were a little better than last year, quarter one, but going forward, Q2 will be even far better. Two reasons. One is that approaching festive season, and second, the cooling off of prices. Both will help in increasing the volume. Now, once the volume increase, let me tell you, our refining cost comes down, cost of utilities comes down, manpower cost comes down, warehousing, logistics, even freight, that is the import freights also reduces. So to that extent, we get a lot of benefits, which are actually going to help in increasing or improving the bottom line.
All right, fair enough. And what about the market share? Because we've seen an increase in the edible oil market share this year versus last year. What kind of market share gains can we expect in FY23?
Yes, this quarter we have got around from 18.1 to 18.7. And as a group with our JV partner, we are at around 19.7. But going forward, since we have a portfolio of oil, our focus will always be to push, say, mustard oil. India has produced very good mustard crop this year, and Fortune mustard oil is the #1 mustard oil. So our focus will be to improve the distribution there. Rural still needs a direct distribution, and if we can reach more number of retail outlets in the rural directly, we can do better. Our today direct reach is around 5.75 lakh outlets, but overall 1.6 or 1.7 million outlets we cover directly and indirectly. So the focus will be on distribution.
Good morning. So the focus is going to be on distribution in the rural markets. What we've also seen in the results is a 15% jump on volumes. Would you have any data on how metros are doing versus the non-metros, the smaller towns, even as you're building up your distribution in the rural parts? Because there's so much that is being said about pressure on the wallets, shrinkflation.
You are very right. The rural market has been under pressure. Our earlier contribution from rural was 35% of our total volumes. This has shrunk to 31%. That is one we are seeing. In the rural market, the SKU size, because of the joint family, was 15 kilo tins and 15-liter jars. That has reduced. And we see more frequent purchase of half-liter bottle, 1-liter bottle, 1-liter pouch. Those shares have gone up quite, I would say, remarkably up. That is an indication that consumers want to buy frequently but cannot afford to put in that cost together. These are the issues in the rural market. But, going forward, once the monsoon has started and in and around, when you see the farm, green agriculture lands, the farmers are normally happy. And then they start looking at a good crop. By October, if the harvest is good, then we would see a lot of revival in the rural market in Q3.
Okay. And would that also be accompanied by more price cuts? I know Aisha touched upon this. The price cuts have been factored in after the government's directive, particularly for the edible oils. But as commodity prices globally are coming off, by when will we see Adani Wilmar pass on all of the benefit to the consumers? Or is it more of a rolling process, or is it under review?
See, increasing or correcting the prices are a continuous affair. It is not once in a month or something. It's a continuous affair. And whenever the international prices comes off, we have to pass on the benefit because we are competing with other brands in the country. That is one. Second, we want to increase our market share. So obviously, we have to be price conscious as well as reach conscious. Now, I'm not able to say how much we can reduce or something, but surely so far in the last 90 days, if you see, the prices have been reduced by almost 30 to 40 rupees per liter. Today's price, let me tell you honestly, is a fairly comfortable price for the consumers. And at these prices, when we interact with the consumers at the retail outlets, they feel quite satisfied and they are quite comfortable. Of course, everybody would like prices to come down, and we would also like. But as and when it happens, we will surely do it. But present situation is still far better than what it was 3-4 months back.
Before we let you go, Mr. Mallick, going forward, now that there will be an additional levy of GST on unpackaged foods, what is it going to mean for a company like Adani Wilmar? I wanted to ask you that. As also another one, any M&As? We're waiting for the full integration as far as Kohinoor goes. But these days, your conglomerate, the Adani Group, is certainly on a shopping spree when it comes to M&A activity, and that's across sectors.
See, on GST, we have been following it up with the government and different authorities that there has to be level playing field when you want investments in terms of higher capacities, better packing lines, better quality products. So there has to be a fair play. And let me tell you, the government has well understood that there has been brands who are using this to bypass the 5% GST. Now that it is over, see, only 10% of the staples are branded today. 90% is still sold in loose. So from the consumer point of view, we don't see great difference. What will happen is at the urban, where people buy a branded rice or wheat or staples or dal, besan, pulses, all these, they would have otherwise also seen a brand, but now these brands are registered brands, so the quality will be good, and there is some onus on providing better quality. Now, all this will give a lot of benefits to organized players like Adani Wilmar. We have a presence in all the categories where the GST has issued, like dal, besan, wheat, flour, maida, suji, and then you have rice, basmati, non-basmati. All these categories, we will see better branded share coming up, and that will be good for the organization as we can invest more in building higher capacities, and we can go all out on that expansion. Next question is your mergers and acquisition. See, we are continuously looking at compatibility in terms of brand fitness or distribution fitness or organization's goal fitness. Now, we are in the staples basket. We feel the country will consume better and better quality staples in days to come. More and more branded share will increase. So we are looking at asset purchase or brand purchase like we have done in Kohinoor to augment our basmati rice business. Like this, we are always looking at, and this is the continuous affair. There's a team who keeps on working on it and eyeing for such type of opportunity.
So great to have you on the show and speak with us. So